Portfolio Builder members, welcome to our Thursday Trade Alert covering the emerging markets. This gives you exposure primarily to China and its top trading partners. A focus on the Emerging Markets ETF, which is EEM, and happens to be the second highest traded ETF in the world, only after the SPY and really neck to neck with America's NASDAQ ETF, the QQQ. As far as the clickbait we gave you in the video cover, that's about 10 cents. I'm just going to pull up their chart real quick so you get a feel for the growth. In the last decade, it grew from $5 to $50. And I believe in the next decade, it will grow from 50 up to 500. And in fact, I think the overall emerging markets will average anywhere from 12.5 to 30% a year for the next probably 30 years. And so we'll take a look at more of that in our webinar later today, which I hope you can attend. If you can't, don't worry, we'll be automatically sending out a replay from now on to anyone who misses it. But if you do attend, we will extend your free trial by 7 days. So try to show up. You'll get a link automatically from GoToWebinar. Right now, this portfolio is neck to neck with the SPY trading strategy and lagging our high yield strategy, which basically takes the SPY and looks at what it actually owns, which is like Microsoft, Apple, etc. So let's take a look at this portfolio. You can see it has a similar composure. The core position is EEM, Emerging Markets. But if we look under the hood at what Emerging Markets ETF actually owns, it actually owns exposure primarily to China, South Korea, India, Russia, and Brazil. So by removing the layer of cushion from the Emerging Markets ETF and going directly to the underlying asset, we have some advantages. One, we can write covered calls at different strike prices based on where the market's expecting each underlying ETF to go. We also have some exposure to the precious metals. And then at the bottom, we have that big 10% position, no pun intended, in Tencent. So Tencent is an incredible company we'll be covering on our webinar today. And they've been buying up primarily gaming-related phone app tech companies and have a portfolio that is nothing short of extraordinary, including Snapchat, Fortnite, and a game I personally like to play called Clash Royale. So we'll get into that in the webinar in detail. Let's take a look at the trades. After covering our positions, we're up 6.8%. And let's take a look at the new trades. So in terms of how you do this, your broker is going to be a one-click, close the position, you're done, to close your covered calls. Next step is to look at the strike price for every 100 shares you own of each ETF. Look at the strike, and then take whatever you can get for a credit. And so these are the credits we collected today for each ETF and the strikes we chose. Now if I scroll down, we can see primarily the market is bullish today for the next week in terms of the option volume for emerging markets. Chose one strike up above. This means we can enjoy some underlying asset appreciation as well as income from the covered call. So this is how we can actually generate a greater return if the market goes up with still having some limited downside protection. FXI is the large cap Chinese ETF. We're at the 45.50 strike. South Korea EWY 63.50 strike, one above. India is having its elections right now, the largest in terms of population democracy in the world. And this is one of the favorite picks long term. Their population is growing. They're slowly becoming modernized, getting the right legal system in place, getting all the fraud out of there. So it's a tiny market cap right now, but in terms of the total size, but it's growing very quickly and a great place to have part of your capital. Russia, we chose the 21 strike. This did jump up a little bit from the previous week, and so we're protecting some of those profits. Not a lot of volume. You can see open interest sitting here at the 21. and some open interest down here in the put options at 20.50. So we being a little defensive on that one. Brazil's a very highly traded market relative to the emerging market ETFs. And there has some debt problems. Most likely they're going to end up printing a lot of cash. So I think this may be a short-term catalyst for their market until they start having some fears of being able to pay their debts. So currently a bullish pick on this, but there are some warning signs ahead. Also, its neighbor Argentina is a complete mess, and so that could drag on its economy as it's one of its big trading partners. So we're cautious on this. It is a small position relative to the total portfolio, so nothing to freak out about. GDX, we chose the 23 strike, one above. SLV, still acting like a dud. We chose one above for 3 cents. And then finally, 10 cent is the buy and hold OTC stock that we believe has some tremendous upside. Now, if this does jump way too high, way too quickly, and seems outrageous, we may take profits and wait for a pullback. But for now, I would expect, without any sort of hiccups in the U.S.-China trade deal, that this will soon be breaking past its recent $60 high. And we'll have to play that one closely, but this is definitely one of my favorite OTC stocks of all time, and the only buy and hold equity we have in this portfolio that targets a specific security and not a basket. So it's a particular company that I follow, and my son and I and our staff use a lot of their products, and they have some great growth stories ahead. So we'll take a look at that in the webinar. And that's really a wrap for today's Trade Alert video. Pretty simple strategy. Right now, we recommend this being no more than 25% of your total portfolio. Although, if the American market gets too expensive too quickly and the deficits don't start to come down in America, there could be some problems long term for the U.S. market. So this may become a bigger and bigger percentage of our portfolio over time. And if you're getting towards the end of your free trial, hope you don't miss out on future trade alerts. You can call to save on your membership. John, 35 years in finance, available at 505-217-8757. Mike, the retired doc, started off following our products after I got to know him. I brought him into the team. Very nice guy. Been following the program for quite some time and the various programs we've put out over the years. 505-322-9884. They do have some discounts only available on the phone. So call them, chat. Don't have to order. You can call them and ask questions and just get a feel for everything. So join us in a few hours on our webinar. If you miss it, keep a lookout for the replay coming out. This is where we're going to jump into some of the nitty-gritty of what's going on in the emerging market scene. Some inside looks at 10 cent and what their plans are for the future, and why we're so bullish on this part of our portfolio. So thanks again, and look for a new trade tomorrow morning.